All right, let's dive into a really interesting one today from Talk Tickers. We're looking at ABM Industries Q4 earnings. Now, on December 17th, they dropped their numbers, and on the surface, it looked like a huge miss. But then, the stock, it rallied. So the big question is, what did the market see that the headlines completely missed? Let's dig in.
So here's the core puzzle, right? You've got adjusted earnings per share coming in a whopping 20% below what the street was looking for. Now, usually, a miss that big, that's a recipe for disaster. You'd expect the stock to get hammered. But ABM did the complete opposite. It jumped over 5.5%. I mean, that's a massive disconnect.
So that really is the question of the day, isn't it? What did the smart money see here? What was hiding behind that ugly headline number that made investors hit the buy button? Well, that's what we're here to do. We're going to unpack this whole quarter and get to the bottom of it. Okay, first things first. To solve this mystery, we've got to peel back the layers of that headline number. We need to figure out what was messing with the picture. Because it turns out the answer is, well, it's basically some accounting noise that has nothing to do with how the business is actually doing. So this is the number that flashed across everyone's screens. 88 cents of adjusted EPS. Now, Wall Street was expecting $1.10. So yeah, on paper, this looks like a total operational failure. But it really, really wasn't. Believe it or not, this entire miss comes down to just one thing, one single item. Management pointed to a 26-cent headwind to their earnings. You do the math, that single item more than explains the entire gap between what they reported and what was expected. And what was it? It was something called a prior year self-insurance adjustment. All that really means is it's a backward-looking accounting change for old insurance claims. Management even said on the call, hey, this stuff is impossible to predict and it has absolutely zero to do with how our business is performing today. And the market, you know what? They got it. They saw it for what it was, just noise, and they looked right past it. So, okay, if investors just completely ignored that earnings miss, what were they looking at? Well, they were looking at the quality of the actual business, the real operations. And you know what? It turns out the business was absolutely firing on all cylinders. Let's start with the top line. Revenue had a record $2.3 billion. And this wasn't just a little beat, folks. This was an all-time high for the company. That signals some serious momentum, and it totally flies in the face of what that weak earnings number was suggesting. And what's really great is that this growth was super healthy. I mean, total revenue was up over 5%, sure. But the really key number here is organic growth. That's the growth from their existing business, without any acquisitions. That was up a really strong 4.8%. That tells you that the core demand for what they do is rock solid. And when you dig into the different parts of their business, the story gets even better. The growth was really led by their technical solutions division. That's their higher value, higher margin stuff, which was up a crazy 16%. And it wasn't just them. Manufacturing and distribution and aviation also put up really strong numbers. So you're seeing strength pretty much everywhere it counts. Okay, so it wasn't just about the strong quarter. The market was also getting excited about something else they announced that same day, a really big strategic acquisition. It's a move that puts ABM right in the sweet spot of one of the hottest sectors in the entire economy. So ABM announced they're buying a company called WGNSTAR, and these guys are a huge deal in the semiconductor world. They provide critical services for the massive factories that make computer chips, the fabs. We're talking about a super technical, super important space that is absolutely booming right now, especially with all the focus on bringing chip manufacturing back home. So let's break down the deal. ABM is paying $275 million, all cash. Now, in the first year, that's fiscal 26, it's going to ding earnings just a little bit, integration costs and all that. But, and this is the key part, by fiscal 27, it completely flips. It actually starts adding to the bottom line, about 5 to 7 cents per share, and the growth is expected to just take off from there. The CEO, Scott Selmers, he basically called this a game changer. See, WGNSTAR has the super specialized know-how to work inside the clean rooms of these chip factories, a place ABM just couldn't get into before. This move opens up a gigantic opportunity for them to sell more services to the chip companies they already work with. And last but not least, the market really liked what management had to say about the year ahead. They laid out a super confident, crystal clear plan for fiscal 2026, and it all pointed to one thing: more strength to come. I mean, the guidance was just solid. They're calling for continued organic growth of 3 to 4%. Then you add in the new WGNSTAR acquisition, and that bumps total growth up to the 4 to 5% range. And here's the kicker. They guided for adjusted earnings per share between 385 and 415. That's a huge signal to investors that the core earning power of this business is really, really strong.
All right, let's wrap this all up. So, we've seen how the market looked right past that accounting noise. It saw a healthy core business, a brilliant strategic acquisition, and a really confident outlook for the future. So, what's our final take on all this?
When you look at these strong organic growth, that awesome strategic move into semiconductors, and a forward guide that looks totally achievable, well, our rating on ABM is outperform. The momentum here is undeniable, and the market is finally rewarding the quality of this business. So, looking ahead to the next earnings call, here's what we'll be watching for. 4 key things. First, we need to see that WGNSTAR deal close nice and smooth in Q2. Second, we'll be keeping a close eye on margins. Can they hit that new higher target? Third, we'll want to hear about the ramp-up of a huge new aviation contract they've landed. And finally, we'll be listening for their capital allocation plan. How are they going to balance paying down debt from this deal while also returning cash to shareholders?
At the end of the day, ABM's quarter is just a perfect example of why you've always got to look under the hood. The headline number, it almost never tells the full story. And of course, just a reminder, this is not financial advice.